I wouldn't have picked Vice President Trump to be vice president, that I think she was not qualified to be president. So let's start there.
Good morning, everybody. Good morning, good morning, good morning. Welcome to Friday, July the 12th. Just coming on 6 a.m., and in about an hour, things are going to start picking up. JP Morgan's going to be reporting earnings right around 7 o'clock, along with Wells Fargo. Citibank reports at 8 o'clock, and then at 8:30, we've got PPI, core PPI. We've got the earnings call from JP Morgan at 8:30 as well. 10 o'clock, University of Michigan sentiment preliminary. Not a big deal, but it is an impactful bit of data that comes out. And that's pretty much it for the day. So quickly scanning over to where we're at. And yesterday, you got your higher high, 56.42.45 off of CPI with a 1.3 point gap up, and then your biggest drop range in, well, let's just say it's been 50 plus trading sessions. We closed here at 55.84. The significance of this is because the weekly candle is 55.72.75. It is still a green week. On the spreads, as we posted out there prior to CPI and after CPI, 56.30, 56.25s, we're getting 350. Minimum that they were getting was 250 as we went into CPI, so you got anywhere from 233% to 100% on it. The question here is the focus going into the week, which is the red weekly candle, 55.80, 55.75. A close below 55.72.75. They were getting better than $4 yesterday, the day prior. So you have on the table a 400% trade, which is now currently, I don't have it up on the screen, but it's getting a little bit better than $3 at present. We wiped out the minus 1% track, so that's finished. We don't have to track that anymore. That has finally, pissed off the big chunk of shit that was hanging there on the side of the toilet bowl. And now the only thing that we're tracking is the minus 2% trading session, which is up to 349 as of today. 351 is what Trump got. Just letting you know, I put it in the email every day, but 351 is what Trump got. We are heading into OPEX week. Then we are heading into big tech earnings after that. So is what it is. You guys have it all, and I didn't highlight this, but as you know, I did not post any safe edges because there are no safe edges to be posted. And yesterday, you absolutely rammed through your lower safe edge, which is, again, why there are days when I will post them, and there are days when I don't, when we start getting clustered up into tiny little ranges. QQQ, 12.55 point day. The biggest day in the history of QQQ. Now, granted, not hard because you're up at higher highs, but you had a 2.43% decline intraday. It was a hell of a lot greater than that off of the CPI spike. It was a minus 14.5 point move off of that CPI spike, 505.21. The minus 1% count is out. The minus 2% count is out. At present, the weekly candle is red. So that is another big dried chunk of shit on the side of the toilet bowl that has been pissed off. IWM, that's where it all rotated over into. IWM. You had an enormous close over close, 7.31. You had a 4.53 point gap up, which is 203.37, and thus the reason why you saw me enter into the August 16th IWM trade. I also shared with you the chart as to what the lifespan of IWM has been above that 207 area. So that's where we're at with that. I'll run you over real quick here to the charts. IWM, starting here. Here's your big gap from CPI yesterday, and we have another gap that's taking place as of now overnight, which is indicative, that there is a possibility that the rotation out of the QQQ into the small crappers could be a continuation. It will be very damaging, but could be a continuation. Now, being that we were extremely overbought, we are teetling on oversold. Teetling on the 4 hour and the 1 hour. The 1 hour actually got oversold on the QQQ. NDX, like I said, we have a pending red week at the moment. Pending. 9 coming off of that Israel invades Gaza low. 5 as we went in here to the beginning of the year. Another 5 as we went off of that May 30 or the April bottom. And here we are with 5 possibly being 6. But again, pending. We don't know what the closing bell is yet today. Over here on the QQQ, as you can see, big old spike up 503.52 to a higher high. Oh no, this is in real time. So I did not change that as of yet. Boom. Higher high 505.21 off the CPI spike and slammed on down right to your 10-day moving average. And more significantly, let me just bring you back here. Your SPX, minus 1% day. 55.77.57 broke it. They broke it by a fucking penny. 1 point. 1 point. Bring you back over here to the QQQ. Your big drop. Oh my God, look at this drop. And we drop right to the 10-day moving average. It's a video game, people. It's a video game, and there's nothing real about anything that you're doing with this. It is a video game. And the more screen time you spend, the more time outside of market trading that you spend in order to try and crack the code on the video game or have somebody do it for you. SPX, as I said, we have a green week as of now. Green week. We have not tested that 55.63, which worked on Monday, worked again on Tuesday. Have not tested it. 55.59 has never been tested. Neither has 55.51, like I've shared early in the beginning of the week, and I apparently pissed off a brand new member because of talking about why 55.51 is support. There is no support, people. There is no support. Nothing other than our old resistance and our old support down here. 55.86 was our resistance. 54.46 was our support. There is no support. But we need to see whether or not one of these supports that did already work for a couple of minutes actually becomes support before we can go and assume that it is not support. So that's why we're not focused on 54.86. We're not focused on 54.46. We're focused on these little points that are right here within where we've recently come off of this euphoric, take a Viagra and drink a shot of tequila and go out on the dance floor fucking move that we've had over the last week. SPX, again, bringing you into context. Again, talking about this weekly candle. Weekly candle here, 55.72.45. A pending 6th week today. We are up 61.60% off of the October 2022 lows. This here I want to bring into context. This 37.49. 37.5% up off of the Israel invades Gaza lows of October 2023. Bring out here onto a 5-year chart so you can see this, right? Here's your COVID bottom, right? Minus 35.41%. And right over here in November, when coincidentally, minutes before they announced that Joe Biden won, Pfizer miraculously came out with a cure to COVID. Nothing else to say about that. The run that Biden had in his first move off of being elected up into January, 34.48%. Now, let me move this out a little bit more for you. No, I want this to be 2016. Apologize for wasting your time. I apologize. Donald Trump, coming off of his win. Coming off of his win when he was elected in November 2016 into the end of January of 2018, he had a 34.77% run. So again, putting this into context is all that I'm trying to do here. We have just had a 37.5% move off of Israel invades Gaza lows, which kind of makes sense since Israel controls the U.S. presidential elections anyway. NDX, the damage that we did yesterday, this is looking at the daily. tiny little 2.5% drop. And as you can see here, we have made a very strong impact on the daily. Come over onto your 4-hour, and like I said, excessively overbought. Never been that overbought before in history. And not yet oversold, but yeah, you did make a move down there. And then you come on and look where you are on the hourly. And this is the reason why you stalled as well, right at that 10-day moving average, because you got oversold. You didn't get excessively oversold like we were back here, back on the May 31 bottom, but you did get oversold. So when you get oversold, you're going to get a bounce. When you get overbought, go fuck yourself. They'll drop it when they drop it. Dow Jones, daily, looking bullish. 4-hour, again, sell divergence, but looking bullish. Here we are right at that shoulder area. Boom, little tiny little head over here above 40,000, right over here at that 39,792. So we see what we see when we see it. Over here on the Russell, here's the daily. Big, humongous, huge bullish move over here on the daily. And as you can see here on the Russell, right up there, that 21.3546, 52-week highs, which with the gap up, if it holds, will be tested, possibly even printed, and your big, huge gap to be filled from yesterday down below. Looking at the daily, not quite overbought. Look at your 4-hour. Woo, we are into overbought. Look over here on your 1-hour, and again, oh, wow, that got overbought. So, again, over on the Russell, on the IWM, you're playing around with, old places you've been. So, real quick, JP Morgan, Citigroup, and Wells Fargo are reporting today, and my focus is JP Morgan. JP Morgan is my focus, and the reason why is for years, not for just in January and fucking up there in March when I tried to get ahead of it. And then when they reported we didn't have anything to trade over there in April, JP Morgan is my bitch. It's just the way that it is. So we're going to be trading JP Morgan after they report today at the opening bell, and we are going to be trading the 0 DTEs. We may see a good enough trade setup where we may even get into some August 16th, very similar to the Citigroup, which, congratulations, saw a lot of you already take off. But I will bring you in here to show you a little bit of context as far as what we're talking about with Citigroup, or JP Morgan. JP Morgan, this is back on January the 12th, and I don't know if the chart's up yet, but I hope it is. January 12th, 2024, got in after the opening bell, the day they reported, Friday, January 2012, into the February 16 JP Morgan 170 puts, and within an hour and a half, 2 hours, they were already up 135%. The 0 DTE 172.50 puts were up 1,475% at the time. And again, like I said, I closed my February 16 170 puts at 329, up 135%, trying to lead by example to show children how to be an adult. And 1 minute after I closed that, a whale came in and took 60,000 contracts. It was a $19.8 million buy, and he did make a lot more money on that. So the 172.5 puts exceeded $1.65, 725% in less than an hour. And let's see if the chart is up, and I don't think it is, because it goes back way, way too far. But those 18.20 cent, right? These were 18.20 cents right around there, right at the opening bell. They went on that day, at the end of the day, to $3.48. So, yes, we are going to be trading JP Morgan. It is going to be on the table after the opening bell. If there is a trade set up on it. If there's no trade set up on it, then there's no trade set up on it. So we go with that. So JP Morgan, Citigroup, I saw a couple of you already take profits on those August 16th. You got a nice little dip down here to the low 65s. Again, on Citigroup, I'm looking at a bigger, broader picture of this, and I know that Citigroup loves to be down in the lower 60 range. So again, reason for the trade. Wells Fargo, I don't trade it. I don't. But yeah, Wells Fargo, one of the shittier items that are out there in the banks. And here you are up in the 60s, which is actually a pretty damn fucking good trade. Up here in the 60s, that's a pretty good fucking short over here on Wells Fargo. Wow, I should have spent a little bit more time on this. Yeah, you're in euphoria land up here, buddy. So, anyway, Wells Fargo, JP Morgan, all those guys are going to be reporting, and We will be coming to you very shortly after the opening bell with the JP Morgan trade. We will see what PPI gives us, and more importantly, make sure that you go outside and touch some grass, get away from technology for a few hours, be a human being, get grounded to the earth. And hey, if you need me, I'll be doing one-on-one calls on Saturday and Sunday. So best of luck to you. Have a great weekend, and I wish you the greatest first day of the rest of your life.
If you want a good time, if you want a good time, let me hear you say, hey.